All right, so the first thing we need to do before we even get to the charts is we're going to read over the report. All right, so current price 29,978. The market has transitioned from prior squeeze environment into a more balanced rotational auction after rejecting 30,300. Current structure suggests responsive two-way trade dealing, hedging stabilizing around 30K. So that means we should expect rotational. The market is deciding whether 30,000 becomes acceptance or rejection. So our primary environment is balance and rotation. So that's good. I like that. Overlapping value repeatedly returns to the POC. Failed directional continuation. Responsive selling above 30,100. Responsive buying around 29,900. So 30,100, 29,900. So right away, those are important levels. So let's read on. So TPO auction structure, our current value area high, current value area low, which is the same numbers that they just pulled out up here. And the POC is 29,975. So excess forming near 30,350, that's exhaustion. That's good. We like to see excess up there. Strong acceptance near 29,975. It's probably where POC is. And then we got thin structure below 29,900. But there's also some stuff at 29,750 that needs to be taken care of. The upper profile shows poor continuation and weaker acceptance. So if we get into this 30,100 area, then we can start seeing some rejections in there. Slight positive gamma near 30K. So slight positive means it's not going to be super volatile. The moves won't be as big and lasting, suppressing volatility in your current price. Now, unless we break down, if we start breaking down through the levels, then it's different. Then volatility will speed up. So approximately move today is about 240 to 270 points. Upper expected move is 30,200 to 300, and the lower expected move. So remember that 760 I was telling you guys about? And there it is. That is the TPO repair that needs to be done. High probability scenarios. Market accepts about 30,000 with strong breadth, semis leadership, software vixen, and then likely path is 30,200. Dealer squeeze continuation becomes active bearish case. If the market loses 29,900 and accepts below 800, likely path is 650. All right, so primary rotational auction until proven otherwise. Fade the extremes, trade the reactions, wait for acceptance, avoid emotional breakout chasing. That's right. So it's no more chasing the breakout at this point. It's, rotational environment until we see otherwise. So now we're going to go line by line now and add these levels to our chart. So here is your actual areas. So if you guys want to pick these up real quick, I'll give you guys a couple minutes to get these already logged on because I already have these on my chart. And then we'll add the rest. And then we'll start forming our ideas and see what's what. Ah, nothing like a cold glass of lemonade, boy. Do, 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 do. Let me know when you guys got all those. We'll keep on going. All right, that's what we're doing now. Let's mark it up. This is where we see where we want to trade and where we don't want to trade. It's more importantly where we don't want to trade. We don't want to get into the middle where there's indecision or you're in the middle of the rotation. So just like the report says, we want to fade the extremes until otherwise proven. So get that chart up, Jonesy, and let's fix it. This is the most important time of the day. After we do this, if you guys want to go back to bed, then go back to bed. That's fine. But this is we're getting a read. We're getting everything set up. So that way, when it comes to perform, we are ready to perform. And what I'm getting up at this time, like I'm doing two things, right? I'm doing this report and I'm doing all my breakdowns and stuff like that. And then I'm also I'm not actively looking for a trade unless we're in the trap buyers or trap sellers scenario because that's the one that's going to go really far in the morning. So this morning I don't see that, but right off the bat I do see migration or value migrating lower because the London mid is actually below the Asia mid. So we have slight lower value migration. So that means the overnight prices of lower have been accepted so far. So we need to, find our spots where we can, if once price gets over that, we can kind of short back to it. Just let me know when you guys are ready. Yeah, man, take your time, buddy. We got all the time in the world. I'm gonna do this with you guys, and then I'll hit the gym, and then I'll come back later on and trade the session. It's all about getting this right. We get this right, we're set up for success, and we have our scenarios, through the day. So, if we gotta go do stuff, you gotta pull away from your desk and go be a human for a little bit. Then when you come back, we have all these things on our chart. Everything's done. So you really just are reacting to what you see on your chart. You're not trying to formulate ideas midday. Cuckoo. Well, Pablo, how's it feel to be payout ready again? Boy, you were ready to give up 2 days ago. I'm so glad you did. I told you we could bring that motherfucker back. That's it, man. That's why you never just want to go and blow it just because. Another day, another regime. That's it, dude. As long as you got money left in drawdown, you still got a chance. It might take you a little bit longer to work out of it, but it is what it is. Well, it's just like yesterday, right? Like we had such good price action yesterday. Even like I missed the majority of the drop when I got back. But the parts that I did catch, like I didn't even have to use a lot of size. I mean, I was using literally two micros and hitting $200 trades pretty easily, pretty consistently. So days that we get good movement, man, you can take 1, 2 micros and make $1,000. It is, man. Like it looks cool. When I post like the 1, 2, 3, 4 minis, yeah, it looks real cool. But when it doesn't go your way, it's not very cool. And it's you're digging yourself into a deeper hole. With one micro, man, I could open up a micro and just walk away. I can't open up minis and walk away. All right, let's keep on going then. So now we're going to go back to the top of the report, right? And now we're going to start marking out these different sections and scenarios. So let me close this down, move this over. All right, so now we're going to start reading from the top. All right, current structure, 2A auction. Okay, we got that. So overlapping repeatedly return to the POC failed directional continuation. So responsive selling above 31,100, responsive buying. So let's see what 31,100, right? So breakout trigger acceptance, right? So now what I'm going to do here is I'm going to see where 30,100 is, which is right in here. So we need to get acceptance above here. So instead of a line, I'm actually going to go and I'm going to use my text box. text, and put this text box right here, and I'm going to say responsive 7 above 30,100 unless acceptance is clear. All right, so now I'm going to take that and I'm going to have this in this area, right? So I'm going to take it, make sure it's not moving around on me, right? Because I want to have it right in that area. All right, so now I know, okay, so if we get acceptance up into this area, then we might be able to take a long up into the main call wall. So now let's see, responsive buying at 29,900, okay? So about right in here, responsive buying, same game. Responsive buying, 29,900, unless acceptance is clear. White, black. Perfect. All right. So now we got those areas on there. So here and here. So these are going to be our prime areas from the convert, shorts and longs. So now our value area highs at 30,075, which is right up in this area. Let's do this first. Before we put the TPO section, let's flip over to the TPO chart real quick. All right, so now we want to see something here, right? So let's look. So this was yesterday's POC, right? This was yesterday's high volume node. So the first thing we're going to do is we're going to mark this off because we want to know. You see how price came up here and rejected right at it. So what we're going to do is we're going to box this area off right here, right? And then I'm going to call this my high volume node. It's going to be my high volume node. And it's also the prior day POC. Okay. Now if we flip back over here, we're going to translate and see what that is. So this was the one I was telling you guys about that I could have took last night. Bang. Right off the edge of it. And we're playing these nodes, guys. We're not trying to play in the middle. We're trying to play edge to edge. That's what we're trying to get in at. Alright, so now we have our high volume node POC. So now let's go back to the TPO chart and see what we got. So here we got value area high for the previous day is up here, but we can cross-reference check that by simply using our step profile. Because sometimes you'll get different readings from the TPO and the volume profile. So let's make sure which one we're getting here. Here's the current one that it was talking about at 75 value area high current, but I'm really going to rely on the prior day's value area more so than current right now. And it's about the same place. So, okay, so from our old teachings, we have balance and we have balance. So our current daily balance is actually inside the prior day's balance. So that should suggest to us that we're going to be in rotational price movement. So compare. Here is my prior day value area high. Same game down below. Prior day. Ooh, this one's kind of hard to tell, but it's down here. Prior day. Right here below. Then your POC is right here in the middle. Right here, all this choppy action. That's the prior day POC. Okay, so now we can turn step profile off. Man, I should let that one more thing before I did that, but that's okay. We got a low volume node right there, so that might be an interesting place, but you don't really want to be taking shorts like right here in the middle of nowhere, or really any trade for that matter. Here's a very, very low volume node. So see how low this is? So even though like it's in the middle, I want to be aware of this. Alright, because it's a very, very low volume area. So I'm going to take this and I'm going to mark this as a low volume node because it's going to be a rejection point. If price gets up there, same thing there, low volume node. There, and then this is like very, very thin volume. So this is what excess looks like, guys. This is what excess looks like. This is large time frame response participants stepping in and not letting price go up there anymore. Then you have a low volume node. You have this little tiny bitty area of acceptance up here. So price will come up here and try to gain, and if it can't, it'll fall back down because there's not a lot of acceptance. So that's the only things that really stick out to me. If we look down in here, we got a super low volume area right in there. That's about the only one that kind of sticks out to me. So if it breaks down past here, it could catch it right in there. But that's kind of reaching on that one, so I'm going to leave that one off. Let's hop back over to the TPO real quick. Okay, so our expected move, let's do that real quick, because expected move is one that I do use a lot. So the upper expected move is about 32.50. Okay, so all the way up here. Oh my God, it's at the low volume node. That's perfect. That'd be a major rejection point. So the low volume node, it's also expected move high. Okay, so that's gonna be a really, really good short area if it got up there for some reason. Now our expected move lower is at 760. Okay, so that is basically where we went to last night at midnight. So it got real, real close. It got really, really close to the acceptance. So the levels are 760 to 650. So we're going to split the difference and say 700. It's going to be our expected move here. Expected move down. These are going to be like our targets, right? If stuff gets going crazy. All right, so now we got the expected moves. So let me check the chat in case y'all got questions. 30,050 for POC. 30,000. Yeah, 30,050 POC. Now remember, we're not going to be taking trades off the POC because the POC is very choppy. We're just using it as a barometer. Or if you take a short up higher, you're using it as a target. We're just using it for a barometer on price. So from the high probability setups, it's just what we have, right? If we get a break above the prior day value area high, and we get acceptance above this area, and we can push up into this area. Vice versa, if we lose 29.9, which is here, we can rotate down into this lower target, right? So 29.9 right here with the prior day value area low. I'm going to say acceptance below pushes price down. So now I know that if we get sub into this zone, responsive buying at 2900, so if we lose that 2900 level, we can see more downside trigger. And so today we are going to put this up here so we keep this in context. Fade the extremes unless new news, new acceptance tells us differently. All right, I'll lock that so it doesn't move around. All right, so before we keep going, are you guys understanding what we're doing here? Do you see how we're building the narrative out? Which one? The expect to move higher or low, Joey? Because there's two. There's an expect to move higher and expect to move lower. And what those are options derivatives. So the options market thinks it's going to go 250 points higher or lower. You missed both? Okay, so the high expected move is 30,250, 30250. And then the lower expected move is going to be around 700, which is also where the TPO needs to be repaired. There's a very, very weak low down there. So let me know when you got those, and we'll keep on going. Okay, cool. So now we got all our levels in here. So let's turn off the indicator just for now because we're not using it right this second. So now we have our high volume node, our POC. It's going to be a magnet of price. We know today is going to be about fading our extremes, right? We got a low volume node right here. We got a low volume node at the expected move. We got our expected move downside. This is our responsive buying area, but if we get acceptance below the value area low, then we can kind of see that downside target come into play. Now we're going to flip over to, actually let's do this real quick. Let's see what kind of RTH gaps we're working with. All right, so big new week opening gap still. What is this, 522? So this is, yeah, this is the new week opening gap here. All right, so there's that new week opening gap. We got a little piece on RTH down here that needs to be filled out. Not saying that we're gonna, get there today, but RTH. I'm gonna take away the middle line because that trade's already done, and that's all I'm gonna mark. We're not gonna go down there anytime soon. All right, so back to full day. Okay, so there you go. We actually just bounced the half new week opening gap. See, and that's why you want to have these on your charts. That's one of my favorite trades is the half bounce. So now that that's happened, I'm going to go back here. And I'm going to take off my middle line. And the reason I'm doing that is because that trade has now already happened. That half RTH bounce that I've done for so long. That was usually like that was one of the first trades, first setups like I ever made, and I was good at. So keep all this. Make sure it's locked. It can't move around. Make sure it's locked. Can't move around. Locked. 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 All the way up. I'll make sure that when we're moving the charts around or pulling the charts that nothing moves. Okay. So now we bounced a new week opening gap. So it's trying to hold in the bullish side of price. So now let's flip over to the TPO and let's get a few other little targets. Okay, so when I say weak lows, I mean this. So you see how there's three boxes at the lows of all these. So there should never be three or two. You should always have one forming at the top of the profile. That's a healthy high. That means auction was finished. Whenever you see 1, 2, 3, 1, 2, 3, 1, 2, 3, that is a unfinished auction. So as you see, yesterday we had that unfinished auction. We came down and we got it right there. But we had another one down here, right, at 733. So price needs to come down, and that's why this expected move is down here because price needs to come down and get this unfair low, right? Or weak low, whatever you want to call it. So that is, I'm going to go right in the middle of the box here. And that is going to be, where is it? Where's my weak low? Oh, I guess I don't have one. So we'll make one. So then, say weak low TPO repick. Okay, going to move that to to the top right. So now I know that's there. Right, so there's my weak low. I know that has to be taken out. Now what I can do, guys, is I can start putting some other high volume nodes on here where price might gravitate to. So all I do is I kind of look out. So we have a high volume node here, and that's why price came down into it and kind of wicked out and then pushed back up. That's what that was from. That was the one I was telling you about that I had on my chart where I could have caught that bounce with the new week opening gap. So we know there's a high volume area right in there. Now I also know there's a high volume node right here. So I'm going to take these two primary ones, two biggest ones I could find. And I'm going to mark those out. High volume nodes. Go up here. I got this one right there. Of course, it's a POC. So we got one forming now, but that's POC. It's forming, so we're going to leave that one alone. All this is a pretty high volume area. We're just going to mark the POC as the highest volume. We'll go ahead and mark this one out just so we have it, because it is close by. It's relatively new. High volume node. So there you go. There's your high volume node bounce. Right. So these high volume nodes do work, as you can see. Price does respect them. The other thing you'll start to see is when you put these things out on, they start to line up. Like here, there you go. Make your main put wall was that big high volume node down here. New week opening gap. The middle of the new week opening gap was a TPO repair. So it almost got there. It almost got there. So I'm gonna have to come down here one more time to fill that out. 800 to what? Oh, the high volume node is from 839 to 787. 839 to 787. I just turned down the color so they don't like stick out at me. All right, so everything that we've put on so far, do you guys understand why we put it on and what the value is of it? We got a roadmap of price, right? So we got a roadmap. Here is your prior day value area high. Prior day value area high. So this is going to be the zone we try to short in, right? So if we get up here and we get spikes in volume and we get delta moving back the other way, then this is going to be a place that we're looking for shorts. If we get down here and we get the responsive buying, same scenario, we get rejection, then we're going to want to take it back into the range. And that, if you wanted to go a little bit further with it, then you could start going and getting your half-back balance and stuff like that. So that's a sell down, but that's not really rapid sell. You have participation on both sides. Now into here it started to go, but that's already been redelivered to. There's one target up here that I liked. It's this one right here. I really like this. And the fact that it lines up with the resistance area. So these three, like, love it. So I might come up here and sweep right over the top of them, liquidity grab it. But there's also these three right here too. So this is going to be a couple really, really good zones up here. These would be like high dollar short zones. So now you have these three FPR, you have the low volume node and expected move. So this is going to be a real zone. It might come up here, sweep these guys out with a wick, touch this node, and drop. So this would be like A plus setup up in here for shorts. So like if we started moving up, if we started moving up and we got up there on like the open or something like that, and it went up and ticked that real fast, I would pretty much enter right away. But right now we're just sticking at this dealer level, right? Because up above we can start to see some bullish side, but we're still going to fade the extremes. Down below we can see some bearish, but we're still going to fade the extremes, until otherwise noted. This has already been served up. Get this little one right down here. If that's the case, this is the volume, high volume area. So, what can you guys tell me about where we are right now? Would you guys want to take trades out of here? Or would you guys rather wait till somewhere else on the chart? Exactly. It hasn't decided. It's still at the dealer pivot. Doesn't really know what's going on. So the other thing we'll add real quick is we're going to add our Asia and London mid prices, right? So now here's where you're going to see. So there is Asia's mid, right? And then we got London's mid. To take the box away, take this box away. All right, so now what do we see? What do you see here now? Because normally the past few days we've had the London over the Asia, right? So now we got the Asia over the London. What does that mean to us? Why is that significant? Yeah, it could be bearish. That tells us that the overnight value migration migrated lower. Not necessarily trap buyers yet. Because part of Asia actually already pushed back. So because London didn't open until right here. So London opened smack in the middle of Asia. So it doesn't necessarily mean trap buyers this time. If London started down here and pushed up through the Asia expansion down, then we would have the trap buyer scenario. Or the trap short scenario, sorry. You got the trap shorts. Then it would be initiate the longs. But we don't have that yet because our value did migrate lower, and London, this is London right here. It's pretty much just hanging out around the Asia mid. So it hasn't decided if it's going to go up or it's going to continue down right now. But one thing we know about these, what do we know about this right here? What do we know about this zone right here? What is this? Between the Asia and the London. We know that in between that zone's a chop fest. It's a lot of indecision going on. So it's not somewhere that we want to be taking trades at. We're just using these as reference points. Hmm. Let's see. Let me hide some of these drawings real quick. All right, so let's go back to it. There's the London right there. Here's the Asia. Okay. So what I do, Jonesy, to make it easy, I just take one of these boxes. I just box out the whole thing. And then it gives me that little middle line right there. And that's where I got my Asia mid at. All right, so one last thing that we can look at to give us an idea, even though it's going to kind of move. We'll check back on this at later on today, or as we get closer to what we're doing. Okay, so we gapped down on bonds. All right, so bonds is the correlation. So we want to see bonds start to go up. So when we're coming into the RTH trading session, I'd like to see bonds recover this, and if bonds can start making the push up, that's going to drive NQ the other way. Not drive it, but it's going to be a player and it moving down. All right, so let's see what the dollar is doing this morning. Okay, so the dollar is up right now. Okay, question time. We have a rise in the dollar value, and we have say we have a rise in dollar, and we have a rise in bond yields before we open. What does that tell us about NQ? What's a probability about NQ then? That means that NQ could be on the bearish side of price action. Now it's not guaranteed. It's not just gonna like just fall right out of the gate or anything like that. But with rising dollar and rising bond yields, that usually puts pressure on equities, which is NQ and ES. Now the other thing that we can look at is ES itself. So ES itself is in rotational right now, as in we're in Nasdaq was in squeeze yesterday. So now, if ES starts to lead over Nasdaq, then that could put some pressure on Nasdaq as well. So let's review what we did this morning. Okay, so now we check the bonds and the dollar. We see it's slightly elevated, so that could go for our bearish rotational case. We have everything lined out on our charts, and we should expect to fade the extremes of price. We're not going to play in the middle. We're going to wait for our high value targets, top and bottom, and we're just going to be super patient and just wait. Like, we're not going to see some stuff like this where it's just falling. We're not going to hop in. We're not going to FOMO. We're not going to do any of that. Okay, we're going to wait until the proper setup forms. If it comes down here, you get a bounce here. That's a trade if you wanted to take. That's a possible trade. I'm gonna wait off a little bit and let this thing cook out because I'd like to get as extreme edges as I can. I don't really want to be playing in the middle because even if I do take a trade here and it's the right trade, it could bounce around on me before it moves to where I want it to move to. But all right, so we're going to wrap this up because there's really no trap longs or trap short trades to be had. But we're now prepped for the day. So I'm going to get off here and I'm going to go hit up the gym and do my morning routine, and I'll be back around market open. So I'll see you guys in a bit. Not a problem. See y'all later.